Hello, in this presentation we'll be working a problem using the last in, first out, or LIFO method. Last time we worked the same numbers, these numbers here, with the first in, first out, or FIFO method. And these are the two methods that are the most distinct in nature. The answers in terms of ending inventory and cost of goods sold will vary basically the most generally between these two methods. We will then move on to the weighted average method, which is generally a method that will result in answers that will be somewhere in between these two extreme methods, and then specific cost method to contrast it with the specific cost method as well. Now, the LIFO method is often one that is a little counterintuitive in that we're assuming that we're selling the last one in to be the first one out. So if you think of us stacking the shelves on a counter or putting the milk in the milk shelf in the store to be bought, we would just put the new one in front and just sell that new one each time. Of course, that wouldn't be very smart with milk because you would assume that you would want to sell the older ones first. But so this method is kind of counterintuitive in thought sometimes, but it is just an estimate. We're only estimating, we're not actually judging the actual physical flow, and therefore theoretically, because it's an estimate, we can think about it this way. And it's also a good contrast to see how different types of estimates can, come up with different results. So let's see the same problem, same numbers here under the LIFO method. So we're going to start off on 3-1 just as we did last time, and we're going to start off with beginning inventory. So I'm just going to put it in the inventory section to start off in the same spot. We had 100 units at $50 per unit. I'm hitting tab. And then I'm going to multiply these out by saying equals. I'm hitting left twice to the 100 times left once to the 50. I'm going to hit control enter. So I'm staying on the same cell. 100 times 50 is the 5,000. Then I'm just going to bring that over to this column as well by just saying equals that same 5,000, because in later parts of this problem we'll have more than one layers, and I want to have the total column to put them all into $1 amount on the ending inventory so we can see that clearly. Now, we're going to put our numbers, of course, into this worksheet in terms of whether it's a purchase, whether it's a sale and cost of goods sold, and ending inventory here. We'll then take a look at the journal entries, and we'll take a look at the effect in both the trial balance in terms of debits being without brackets, credits being brackets. We have something in balance, and once we post this, then we'll see the effect on the trial balance as well as the accounting equation. It's really good to see this stuff kind of in context in the big picture. Okay, so the first one says that or the second one, on 3-5, we purchased 4,000 units at $55. So I'm going to put that in the purchase area, which is these first three rows, and we're going to put them right here in C35, and I'm going to say that we have 400 units, tab at 55, tab. So I'm going to say equals left twice to the 400 times left once to the 55. I'm holding down control, hitting enter to calculate that. So now I'm on the cell rather than in the cell. Then I want to see what's in our ending inventory. First, I'm just going to pull these numbers down. So I'm just going to go ahead and highlight these three, left click and copy, and then right click and paste it 1, 2, 3. Then I'm just going to pull these numbers down. So I'm going to highlight those three, right click, copy, put my cursor in cell K36, right click, paste it 1, 2, 3. Why am I doing that? Because as of this date, as of this line, we have 100 units at 55 and 100 units at 50 and 400 units at 55. Therefore, the total in dollars is going to be the sum of these two. So I'm going to put that formula here, equals SUM, and I'm adding up the 5,000 and the 22, giving us control enter 27,000. Now, if we look at the journal entry in terms of buying this transaction, it's pretty straightforward journal entry. We bought inventory. So inventory is an asset. We're going to make it go up by doing the same thing to it, which in this case is a debit. So I'm going to increase inventory. I'm going to assume for the purposes of this problem, we bought it on account. So instead of crediting cash, we're going to credit accounts payable. Then if we post this to our entry section in our trial balance, we can take a look at the beginning numbers. We could see the activity and see what the ending numbers would be then. So if we started off with inventory of 5,000, which is what we had before this, and then we post this transaction, I'm going to post it by saying equals and select this 22,000 there. That's a debit. This is a debit. It's going to make it go up in the debit direction because the like things make it go up. Then we're going to go to accounts payable, which has a credit balance equals. This is a credit. This is a credit. It's going to make it go up in the credit direction and put us back in balance. Notice there's no effect on net income, which is actually a loss right now because it's revenue minus expenses. All we have are expenses on the income statement portion. Therefore, we have a $10,720 loss at this time. So now we're going to go back over here and see the next transaction. I'm going to put it on the next row. So I'm going to put it on this row, 37. And that's going to be on 3/9. And what happened? We sold stuff. We sold 420 units. Now, it says we sold it for $85. Remember that. That's the sales price. And this worksheet is working on the cost. So we'll need that 85 when we think about the sales price, but when we calculate the cost of the goods sold, it's going to cost either 55 or 50, one of these two. That's what we bought it for. Therefore, so now we're going to go in the cost of goods sold section in these three columns and record this. Question being is, we have 100 units at 55, 100 units at 50, 400 at 55. Which ones did we sell first under this assumption being LIFO, last in, first out? The last ones in were these 400 at 55. We're assuming we sold the $55 ones first. So we're going to say of the 420 sold, 400 in this case we're saying came from the $55 ones. We sold the more expensive ones in terms of in a period of rising prices, which is going to be usually what happens. So I'm going to say this equals the 400 times the 55. Then I'm going to say equals 420. That's how many we sold in total, minus the 400, means that we need another 20, and that will come from the other section, the 100 here. So of these 100, we sold 20, which cost this $55, and therefore we have a cost of 20 times the $50, and this 22 plus the 23,000 being the cost of goods sold in this case. Now we're going to see of this layer, how much do we have left? And so I'm going to say of this 100 at $50, we sold 20 of them. So we still have 80 of those older units left. And those units cost $50. And if we multiply that out, we have the 80 times the 50, and Control Enter gives us 4,000. Then of this 400 units at 55, how many of those do we have left? None, because we're going to say the 400 minus the 400 that we sold at 55 means that we have 0 left in both units and dollars. So then I'm going to just add up these two. So we're working on this row. These two are 2 rows, of course. We have the 4,000 and these are gone. So we can kind of eliminate that once we go down to the next part. But as of now, as of March 9th, we have the equal sum of the 4,000 and the 1, making it 4,000. All right, so if we post this transaction, there's actually 2 transactions that are happening here. We have a sale, and we're going to record the sale as we always do. And in order to record the sale, we only need these 2 numbers. Then we're going to record the inventory reduction and the cost of sales, which is what this unit is for, what this worksheet is for. So first of all, if we just record the sale, we sold 420 units times the sales price of 85. So I'm going to say we sold it on account for purposes of this worksheet, and therefore it's going to go into accounts receivable, and it's going to increase sales. This is our normal journal entry for any type of sales transaction, and then we'll record the other half of it being the cost of sale and the inventory. So if we go to the accounts receivable in V36, say equals, and point to this 35.7, this is a debit, this is a debit, making the debits go up in the debit direction, putting us out of balance. Then we'll go into V40 and say equals, and point to the 35.7. That will make us go up in the credit direction, put us back in balance, make net income go up, in that we now have income as a credit minus the debits of expenses being 24,980. That's net income in this case. Then we're going to record the cost of the inventory, the second half, because we didn't just make that revenue from nothing.